Hey guys, how's it going? Let me go and set up this room real quick and then we'll get started. It's 2 o'clock today. So good afternoon, everybody. Hopefully you guys had a great trading morning so far. Just get everything all set up here and then we'll get started with this metric session. All right, looks good. So let me get this link sent out to you guys here in the premium. All right, guys, looks like everybody's making their way in right now. Give it a few minutes for people to join. All right, guys, cool. So good afternoon, everybody. I got a few minutes for people to make their way in. If you guys have any questions, feel free to put your questions in the chat. I'll be going over them in chronological order. So the more questions we get, the longer the session will go for. I'll make sure I'll answer everybody's questions before we end the session. Yeah, I'm here to help you guys out. So whatever you guys need help with, feel free to drop your questions in the chat. We have one question from Delmas right now, which I will be going over shortly. Yeah, we'll get started shortly. So, hey, Christopher, good afternoon. Hey, Randy. Yep, we're definitely going to go over that 5 minute. I've been testing it and man, what can I say? I think it's crazy. It's been like, I've added a couple of requirements here. Max, there's some entries that should be avoided. But I will show you guys the strategy. The strategy works really good. It's it's blowing my mind, guys. Like, honestly, I don't know why I never thought about this prior, because it was so easy for me to just look at the chart and look for entries, and I didn't even know what I was looking at. So it's gonna be pretty interesting. Hey Matt, good afternoon, everybody. I'll give it a few more minutes. It's 2:02 right now, so it's only 2 minutes into the session. I'll let more people join into the room. But definitely we have one question from Delmas, which we're gonna go over first. And then after that, we'll go over this 5 minute strategy that we've been kind of covering. It's just been pretty crazy. All the entries that I saw today that fit these requirements, all hit full TP. So I think you guys are gonna like this. And this will probably be one of our main staples over the next couple of months as volatility stays high. It's kind of hard to trade on the 1 minute. You guys saw today, we took a variation here. Unfortunately, it hit stop loss and then it went straight down to TP. The problem is volatility is too high, so it's a bit hard to trade on this 1 minute chart now compared to how we were trading on here, the past 5-6 months. So it's like people are making their way in right now. Other than that, yeah, Patricia said it works great on the 3 minute as well. So I do agree with Patricia as well. I did notice that it works really well. So it does work well on the 3 minute and the 5 minute. I think Maddie was saying that we might be focusing on the 3 minute and 5 minute with regard to this V3 variation. It works like crazy good. So we'll go over them a little bit, but first question right here is from Delmas. Delmas said, can you go over drawing up liquidity zones and when it's okay to use them to take trades during the breakout? For example, today versus yesterday, did you take today's trade because we had liquidity in the same direction the buys? Definitely, Delmas. That's 100% why I took it. So let's go back to market open. So let me just go over here to 6:30 a.m. my time. This is when we started our session. So 6:30 a.m., which was right over here. Okay, so right before the market opened, I actually took the breakout before market opened. So let's go back a few minutes before. The thing with these liquidity zones is that it allows you to take the breakout before it actually comes. And this is one thing that I was discussing with a couple other people today as well. So let me just hide this. I'm just going to take off the stuff that's not necessary because we don't need all this stuff on the chart. I want to clean it up as much as possible. So what I'm going to do here first is I'm going to draw these liquidity zones. So these were the liquidity zones prior to market open. Nothing here, it's very broken, nothing there, nothing there. And the thing that you guys got to keep in mind is that there were liquidity zones in both directions. So this provided for possible breakout in either way. The thing that I liked about this is the fact that it was pushing towards liquidity in the direction of our bias. So that's why I was sold on taking the trade in this direction. So there we go with that. Let me go back over here. We have a low, another low right there. Another one right here. Another one right here. So as you guys can see, there was a lot of liquidity in both directions. So on market open, this is where price was right here. And here, this is what I'll do as well. I'll just turn off the high-low indicators just to clean it up a little bit. So anyways, looking at the chart right here, you can see that we have a ton of liquidity up here, and we have a ton of liquidity down here. So regardless as to what direction price pushes, you can catch liquidity in either way. So for example, right here, we had a sell signal. So what I was waiting for was for price to break below this liquidity and cash that ride to the downside, right? If we had a buy signal, we'll be looking for price to push this direction to hit liquidity here and then take a buy. For me right here, as you guys can see, this is a trade that I took this morning. When price came below here, this is where I entered the trade. All right, let me go back a little bit. Let me see if I can't remember. I think I might have had a different. Okay, so this is actually where I entered. I actually entered a lot higher. So we actually had another area of liquidity, which was right here. So this is actually where my entry came from. So let me just go over here real quick and I'll show you guys. Price came down. We had the sell signal. Price came back up right here. And what I was waiting for is for price to drop back down. So as price dropped down again, so price came back up right here and it came down again off the second candle. My entry actually came in from right here. Because when I saw price pushing off this liquidity right here, so you can see, for example, right here, when price pushed down here, I already anticipated price to push down to the next area right here. I know this wasn't the breakout because market was technically not open yet, but I was already in the trade. So I got into the trade way before the breakout actually came through. So the breakout technically probably came down here, but I probably wouldn't have taken it because the candle's so big. So there was actually no breakout today. This candle for the breakout, I wouldn't have taken it because this candle was just too big. Obviously, you know, when the candle is big like that, it has to retrace back up, right? So that's the reason why I wouldn't have taken this as the breakout. The breakout technically didn't come today because generally you have to take the breakout within the first 5 minutes. Or actually, I take that back. The breakout would have happened right here. It just would have came like a lot later. But it would have been too risky, so I wouldn't have taken it because it's like 5 minutes in. So this trade that I took right here was based off liquidity. It wasn't based off the breakout. It's based strictly off liquidity. Main reason I took it was because, so one thing that I look for when I look for these liquidity breakouts, guys, or I don't want to call it a breakout because it's not the breakout strategy. When I see two liquidity zones or areas right next to each other, so say for example, this right here, right? When there's two lines that are right next to each other, I already expect that to push to the next line right here. Same when it gets down here. If it pushes down to this area right here, I'm already expecting this to push down to this next area. you can't have liquidity where it's just one line. There has to be like two areas right next to it because that gives it push for it to push further. So for example, right here, if price was to reach this area where they were right next to each other, then I would expect it to push up higher. Just because it reaches this point, I don't expect this to push all the way up here, right? That's one thing that I want you guys to understand. And that's why I was so sold on taking this trade right here. Because price came back up and I was like, okay, if price comes back down and crosses right below this, then it's going to hit that liquidity where it's going to reach this area right here. That's why I entered the sell right there. And as you can see, that's what happened. Price came down. It, oops, let's fix this. Let's reset it. Okay, so yeah, anyways, we're playing it to this right here. Okay, so this following candle right here, where you saw it break below here, that's where I entered it. If you guys have seen me mark this up when I first introduced it, I basically mentioned that in some instances, if we have a sell signal, then if it reaches this point, I just have a sell stop right there. And that's what I actually had. I had a sell stop. So when price pushed down, it automatically entered me into the trade. And that's how I made this profit this morning. The 5,900. Because I literally entered there and then it just broke right through and then continues to drop lower. You know, vice versa. We had a buy signal. So if I just go back to here, and say this buy signal right here broke above here, right? If that broke above this area, then I would have taken the buy to this next liquidity zone right there. I know it's a little complicated. You guys have to practice and actually like see this in action to kind of understand what I'm saying here. But yeah, price never reached that area. So we wouldn't have been able to take it. But price did come down here, and that's why I would have taken the sell. So that's the difference between today. Let me go to yesterday's and I'll see if I can show you, because I think it happened yesterday as well, right? Let me go check. All right, let's see, 6:30, which is right over here. Okay, so here's another one from the day before. Yeah, Delmas that I entered at 6:29. Yeah, so that's basically where I entered. So I'll go back to it later, Delmas, but that was pretty much where the entry came from. But let me just show you another way to apply. It's the same way of applying it, but just on a different day, because it works both ways. I mean, if you guys know what to look for, it's actually not that difficult to catch these like big pushes of liquidity. Like for example, right here, right? We have liquidity above, we have liquidity below. The only problem is that it doesn't really go that far because there's only one other level below that. But looking at the top right here, we actually have a lot of liquidity. So when price pushes up higher, it allows for you to take, you know, a bigger push. And this is exactly what I was trying to get across to you guys right here. So looking at, like, you guys can see how there's a lot of liquidity bunched up right here, right? That's where you guys want to take these liquidity pushes. You don't want to take them when they're standing alone, like right here. Down here, nice. Up here, nice. Down here, nice, right? Because these are like right next to each other. So if price breaks below these liquidity areas, it's probably going to push to down here. Vice versa, if price hits this area right here, it's probably going to push up to here, and then from there push up even higher to the next one, possibly. Not for sure, but it's going to push up at least, you know, a little farther up. So, okay, here's the example for yesterday's. This is on the 24th. So right here we have a buy signal, right? So we're looking for liquidity to push to the upside. If it hits this area, we'll take the buy, add it to the upside. You can see right here it actually pushed below. And when it pushed below, it actually knocked out all of these areas of liquidity right here. But this is pretty much what I was just referring to, right? So I mentioned if there's two areas of liquidity, if it pushes below there, it's probably gonna hit the next line, which it did right here. It did exactly that. And then you can see as price comes back up. So like, see how price hits the liquidity right there? it doesn't necessarily, well, I mean, this actually wouldn't count. So let me just go back to what I was saying earlier. So when I say this area right here, we needed to push past this right here, right? So when this candle right here touched this liquidity zone and not this one, then this one gets invalidated. It's no longer valid anymore. So at that point, price pushed below and it just kept bouncing around. So this isn't a situation where it wouldn't work out. The difference with this is the fact that, and let me just go back over here real quick. And I'll redraw that again. So Delmas, do you see the difference here from today's and yesterday's? The difference with yesterday is that it didn't go with our bias. Our bias from yesterday was a sell. If we had a sell signal here, then we would have taken it for a sell, right? Because if price would have pushed down below here, we would have the ability to take the sell. There's actually no sell signal there. So that's what makes it a little bit different compared to today's. There was a sell signal, so we could take the sell. If we had a bias for a buy and price pushed above here, then we would have taken it. So yeah, exactly. And that's why you asked. So that's why Delmas asked. So Delmas asked this question because he wanted to see what was the difference between today's entry, because I took today's, but I didn't take yesterday's. The reason why I didn't take yesterday's was because our bias was for a sell, but we didn't have a sell entry here. And that's why I just let this one run, because they're just going back and forth anyways. There was no entries that were available, but you can see right here. So right here for the buy, we wouldn't have taken it, but say for example, if this was the entry here, let me just clean this up right here. All right, so at this point here, we do have a sell signal, right? So right here's where you could actually take it. So see right here, we have a sell signal, but it didn't break below. It established two lows right there, right? This is what we want. We want lows or liquidity that's bunched up. So this right here, price push below. I would have had the sell stop right here, just like I was mentioning before, right? So if price comes up like that, then I'll have a pending sell stop right here, just the sell stop to catch the move as it comes back down. And I don't expect any of you guys to really understand how this works, because this is more complicated. This is like more advanced way of trading. So the majority of people aren't going to be able to catch these moves unless you really know what you're doing. But anyway, so I would have had a sell stop placed right there, and then I would have been filled. So now I'm in the order, right? My TP would be like somewhere before this line, maybe like right there on 600 pips. Let this run, and there you go, full TP. So as you guys can see, this is how it works if you were to apply it with regard to your bias. So whenever you guys enter these trades, your bias is still going to matter. You don't just take whatever trades for whatever reason. You still want to look at retail sentiment. If it's long, you're looking for some sells. You want to look at the futures data, make sure the futures data is red. If it's red, you're definitely looking for some sells. So yeah, hopefully that makes sense to you guys. I know it's not going to make sense to everybody, but I think to the people who actually understand how these liquidity zones work, it makes a lot of sense, because basically what you're doing is you're looking to trade in the direction of momentum. We have a sell signal here, so we're anticipating momentum to push to the downside. We have it push to the downside, it hits liquidity, and then it pushes to the next liquidity zone down here. And that's pretty much how I take these trades. This is probably not something that I'm going to really teach people because it's too complicated for a beginner to learn. This is something that you guys will learn with trial and error. This is something that you can use as an extra confluence, with regard to any entry that you take. So if you're applying a different strategy, you can use this to take a bigger move. It's not necessarily a strategy on its own, but it's something that you can use to push it further. So let's see. Patricia's asking, yeah, 13 said, you sounds like you really need to use a stop loss in TP. Yeah, for the breakout, you definitely do, because you're going to have price bouncing back and forth. Patricia's asking, what are you using for stop on the breakout? The stop that I have for the breakout is about 500 pips. I usually don't like to go anywhere past 500, but my target is going to be around the next liquidity zone. So for example, here, I know this isn't the breakout, but if this was technically the breakout and my entry would have been right here, I'm going to the next zone because this is where we're anticipating it, right? So when price breaks liquidity, we're anticipating it to push to the next zone. I mean, technically you can go straight to the line, but you want to have enough space to cover the spread. Like today, spread is going crazy. I'm not sure if all of you guys are on the live today, but spread was going between like 100 to 300. It was just going back and forth. So you want to be able to have enough space here to exit the trade without getting caught in the spread. So that's why I have a little space here. Technically you can catch the whole move, but you want to get out to get pulled out before it triggers a spread, or like where you get caught in the spread. That's usually what happens. So that is how I would take it. So for the breakout, I usually have my stop at 500 pips, Patricia. But when price moves down, so for example, right here on this trade, when price moved below the, when it moved into profit, I actually moved my stop loss in profit to guarantee profits, and I just let it run to TP. So I actually moved my stop loss like right there, but then it ended up hitting my TP anyways. Yeah, I answered Rick's question there already. Matt said spread was ridiculous. How do you quickly move stop loss into profit? So I just drag it on mine. I'm not sure how yours works, Matt. Matt said that the drag and drop doesn't work like it does actually. So I can't move my MC4 here. Every time I try to move my MC4, it kind of messes up my application. I don't know if it's because it's on a Mac, but so basically when you have your MC4 set up, I know it doesn't look like this, but you have like two lines right there, right? You have like a red line or whatever color line for your TP and your stop loss. On MT4, I'll just drag the line where my stop loss is, and I'll just drop it right below it like that. And then it'll adjust my stop loss to that area. So that's how I do it. I'm not sure if you're able to do it, Matt. I know it's kind of complicated. Yeah, you might have to play with it because when I drag it, it doesn't always drag. So like if I click on it, sometimes it won't drag anymore. You have to like click on a specific point. Like you can't be like too high above it or too below it. You have to be like right on it, and then you just drag it below. It might be a lot easier on mine because I have a really big screen. So it's like, spaced out so I can put it really close. And I don't know if it's because I have a really good mouse. I use this MX Master 2S. So it's really like, it's a Logitech mouse. It's really like precise. So I'm not sure if that's the case why I can do it, but I do know what you're talking about, Matt. Sometimes it doesn't drag. For sure, I can't draw my drawings. I try to drag my drawings up and down. That doesn't work. But for my stop loss, it does work. Thankfully, it works. But you might have to play around with it and just practice clicking around the areas to find the perfect spot. Matt said, so I need to trade on an 85-inch TV business off. Exactly, Matt. Yeah, you'll pull a Matty. Just on your first payout, buy everything that you need. Where's Matt? Is he here? Oh, Maddie's not even here right now. Let me see where Maddie's at. I'm gonna message him. Oh, he's here right now. Okay, cool. Yeah, so Maddie is here. He's just back testing the strategy. All right, so I think that's it with this question. Yeah, Rick said zooming in helps. So Matt, you might want to try that. I have mine zoomed in, not zoomed in very much, but enough to where I can see all the candles. So maybe that might be something to help you out with dragging your stop loss around. Christopher's asking if I use a Mac or PC. I use a Mac. I don't know how to use PC anymore. Ever since I got Macs, I can't, or Apple products, I can't go back to PC. It's like, it's way different. Cool. Other than that, guys, let me scroll up real quick. I think that's it for these questions here. If you guys have any other questions regarding these liquidity zones, go ahead and drop them in the chat. I'll come back to it later. But I think the next question here is from Mauricio said, once you go Mac, you don't go back. Yeah, I know. You get used to it. I didn't like Mac at first, but once I started to figure out how everything worked, it's actually pretty simple. All right, guys. So it looks like I think that's it with these questions right here. Let's go over to the 5-minute now. So this is what everyone's been waiting for, the 5-minute. Well, we have one more question from Milzon. Let's see, Milzon said I'll get to your question later, or let me just answer real quick. So Milzon's asking for V1 and V2 strategies. Do you think we should skip the first trade that comes up and take the next one that comes up. No, I wouldn't recommend that. The only time you'll skip it is if there's a big drop, like for example here, like for today. You would want to skip it because, so say for example, and you're not skipping it because of the trade, you're skipping it because there's a big drop right here, right? If you have a drop this big, what does common sense tell you? Price is going to have to retrace, right? Because it can't go down forever. So that's why in some instances like this, we would skip it instead of taking it right away. But for example, today, the trade didn't really come up until like way later. So you're skipping the trade not because you want to skip the first one, you're skipping it because price has to retrace. Like you're not going to catch it down here and you get a variation right here and expect it to keep dropping even further, right? So if you measure this from this point, this is like a 6,000 pip drop. After a 6,000 pip drop, wouldn't you expect that price was to retrace? So that's the main reason why you would skip it. You won't skip it just because, you'll skip it because it's been dropping so far. Like for example here, if price was only dropping to this point, let me see. If price only dropped to this point, like maybe 1,000 pips or so, you're not going to skip any variations, right? Because it's a normal drop. This is how price normally drops on open. So you won't really skip it here. If it drops a lot, like, and I mean a lot, like not just a little bit, but a lot. If it drops like 6,000 pips, you're like, okay, price is probably gonna have to come up. So that's where you would skip it because you don't want to keep going in the direction where price is likely to do the opposite, right? So the same thing works with our sentiment. When price is dropping heavily like this, what do people generally do? They usually bandwagon onto these trades, right? They think price is going to keep dropping, so they enter a sell. And then as soon as they enter a sell, price spikes to the upside and stops them out, right? So that's why you want to be careful with taking them if you have big drops like this. If it's dropping a little bit like this, it's no big deal. It's going to come back down. But when it drops like this is definitely where you don't want to take any trades. You want to wait for price to stabilize, right? So what we usually look for here is when a big drop like this happens, we look for price to consolidate a bit, because once it consolidates, then it continues either down further or it retraces back up, right? You don't want to trade when price is just going down and down and down, because you'll get lucky for a while until it finally swings right back up. So yeah, you shouldn't skip it just to skip it. You have a reason why you would skip it. Similar to any other trade. It's not just for V2, V1. It's specifically for like any entry. So you can have a triple confluence and I still wouldn't take it if it's dropped down this far. Yeah, no problem, Milzon. I know it's kind of confusing sometimes if like you're not familiar with seeing it, but you just want to make sure. And it's hard to see right here because we're looking back in time, but during the live, you can kind of see, because, during the live today, we're pretty much waiting for a variation to come up, and we're like, damn, prices dropped so far. I think it came down to like right here, like around 7. We were like, all right, prices dropped way too far. And then I was telling you guys, if we get a variation, we're probably not going to take it because it's going to have to push back up. So it makes a lot more sense real time versus looking back and reviewing it. Yeah, 13 said, yeah, I chase too often and end up eating half my profits. Yeah, and that happens to everybody. It's FOMO, right? You see price dropping, you just want to hop into it. As soon as you hop into it, you might get the last of it, and then it shoots right back up. But just put it this way, guys. Whenever you guys take a trade or make a move, always have a reason behind it, right? Like if you guys are taking a sell, make sure there's an entry there, and just make sure you analyze, all different factors that can come into it. Like for example, here on the 1 minute. So here, let me see if I can find. Okay, so right here, price started to reverse, right? One thing that you can do, which is something that a lot of people do in the group, is they'll go on the higher time frames. I know this is something I think Rick does. You go on the higher time frame, right, Rick? And you look for the SR zones. So looking at this right here, you go on the 5 minute. There's an SR zone right here, right? So if you guys are trying to catch where that bounce is going to happen, just go on the higher time zone, turn on the K2 SRs, go back on the 1 minute. And, price is getting close to this SR zone. So odds are it's probably going to swing to the upside. So looking at this here, price comes down and then straight up reversal to the upside. Or even if you want to go on a higher time frame, you don't have to go on the 5. You can go even higher. I see some people that like to use the 10 minute, sometimes even the hour. If you go on the 10 minute here and you turn on your SRs, you can see that there's more zones down here. Or if you want to go on the 30-minute or 15, it just depends on what you guys want to use, right? There's no like perfect time frame to look at. You can go on any time frame and you can see that there's zones everywhere. So it just kind of depends on where you want to look. You know, whether it be the 3-minute, whether it be the 1 minute, whether it be the 4-minute, whether it be the 5-minute, doesn't matter. You can go on any time frame and you can find zones, you know, located around these areas. So you have that there. You can even turn on the high low. Like you can turn on the high low and go on like the 10-minute or something. Or even go on the, there's a bunch of different time frames you can go on, 15. And you can see that they kind of line up, but there's always going to be one way or another to figure out where price is likely to bounce from. But let's see, CD's asking, is it worth using 4-hour, daily, and 3-day? If you're scalping, not really. Because the thing is, you're scalping with like, if you're scalping on the 1 minute, the daily is not going to make, it's not going to be any use to you, right? So if you go on the 4-hour, so check this out. We're here on the 4-hour. And your low is like way down here, right? You go back on the 1 minute. You know, what are the odds of price coming down here and touching your 4-hour? Not likely, right? It's like 4,000 pips away. So this is why it's kind of relevant to use the higher time frames if you're trading on the higher time frame. I mean, if there's a zone around your area, then maybe, but odds of it getting to that point, very unlikely. Similar with the daily, right? If you go on the daily, so here's auto. The low right here for the daily, or even the zones, you know, the zones aren't even anywhere near, or kind of near. So here's the thing, if you don't have any zones here on the, on say the 5-minute, yeah, that is a liquidity zone CD. So, you know, like you mentioned earlier, so if you're on the 1 minute, you're trading on the 1 minute and you're looking on the 4-hour, right? Your liquidity zone's down there. You're not going to hit that liquidity zone. Or even if you're looking on the daily, just like you mentioned earlier, liquidity zone's at the same price. If you're looking on the 3-day, I don't even have the 3-day on here. Let me see if I could find it. I've never even heard anyone use the 3-day. I'm not sure if that's common for you, but I've never seen anyone use the 3-day. But yeah, either way, 3 days right here, the 1 day's right here, and the 4-hour is in that same exact price point. So looking at this right here, if you're trading on the 1 minute, you're probably not going to hit that liquidity zone. I mean, if you want to, or are you talking about like trading on the 4-hour, one day and 3-day CD? Are you talking about trading on those timeframes? The problem with trading on those timeframes is you're not going to be able to handle those moves, right? Unless you're trading on a personal account and you're holding them for like forever. So if you're talking about this, like taking a trade here, I mean, technically you could use them if you wanted to. There's nothing wrong with using them, but you're probably not going to reach that area for a while. So for example, right here, or I can't even show you an example. All right, let's see. So CD said I'm talking about bounces off the high. Yeah, and that's exactly what I just was going over earlier. Do you understand what I mean by that, CD? So that was exactly what I was just talking about. So you're talking about using the daily low right here for liquidity, right? If you're trading on the 1 minute, you're never going to hit that price point, or you're not going to hit it for like maybe a day or so because it's so low. Like, look how low it is. Right? This is the low from the 4-hour. It's not going to hit that point anytime soon. So you're better off on the shorter time frames. So I mean, you can if you want, but it just doesn't make sense. I mean, does it make sense to you for you to have to like be focusing on this area down here when price is way up here, or vice versa with price being? Let me go higher time frame. You just can't see it on the 1 minute. So like, look right here on the 10-minute, right? Your next liquidity zone's way up here. You're probably not going to hit that for like a week. So by the time that week comes around, it's relevant, right? Because there's going to be new zones around that area. Same with this one down here. So let's see, CD said, I understand. So I use 1 hour max, you think? So if you're asking me personally, I've never used it. You know, you guys never see me go on the higher time frames. So if it works for you, then I would recommend, yeah, go ahead and use it. But I don't use it because I don't find it to be relevant at all. If it works for you though, you know, you're more than welcome to use it. It's just for me personally, if you're asking me personally, if I use it, you never see me on those high time frames. So for me, I would never use it. Because here's the thing, like here, let me show you an example. Let me go back in time. Because the thing is, you're focusing on these higher time frames, but when you go on the lower time frames, those same zones are going to be there. So let me go over here real quick. I'm going to try to see where price retests. Okay, so here is an area over here, and I'm trying to make sense of this so that you guys can understand what I'm saying here. So, okay, say we're trading on the 1 minute, right? Or here, let me know because you use we said the 4 hour. Okay, so the 4 hour is like right here. I'm just gonna draw the closest zones for the 4 hour, and then I'm gonna go on the 1 minute, and I'm gonna show you that these zones end up coming up anyways. So here is the 4 hour. Let's go down to the 1 minute. Let's let this run. It's going to take a while, but it'll get there eventually. Okay, so when you get over here, right, price comes right back to that area there. New zones get created around that area. So for example, if you would have waited for this to touch right here, it just would have became a 1 minute zone anyways. So that's why I don't really use it, because it's going to come up either way. You know, you're not going to take the initial bounce off that specific price point. If you want to, you can. I just find that to be too much work, because you're focusing on stuff that's like so far out. So I think it's going to be by preference, right? Me personally, I wouldn't use it. There's just no point, because if price reaches that point, then okay, that's going to be the area there. Unless you develop a strategy off that. Like if you're looking for a strategy where it bounces off a high low from a different time zone, then yeah, I mean, from a time frame, you can use that. But trying to tie this in with what we are currently applying, it just wouldn't be any use, right? Because the strategies that we're using are for that specific time area, that specific time frame, not necessarily looking into the future and into the past. So, CD, do you understand what I'm trying to explain here? I just want to make sure that we're like on the same page, because I know that you're looking for like possible rejection points, and that could be a different strategy for you. So for example, here, you had a low here that was drawn up on the 4 hour. If you want to look for price to come down and reject off that point, you could do so. But this also lines up with the other strategy that we just discussed, right? The one that we're going to look at on the 5 minute. We have a low here with red candle. The next candle right here is a green candle. 75 is the max TP. I know this is the 1 minute, but I'm just going to show you. This is exactly the same strategy that we would have ran on the shorter time frames. And there you go. It would have hit TP either way. So even if I wasn't looking for that 4 hours, that 4 hour low, this entry right here still would have lined up with the new version 3 of the variation. So as you can see, stuff does come together and it lines up full circle. But I think it's just a lot of work for me to go back in time. So I don't necessarily use it myself. Here, let's see. Gotcha. Okay. Yeah. So I get what you're saying, CD. The problem with the liquidity zones is that you're not looking for a bounce. Like when you have these liquidity zones, you're looking for price to break through it, right? So you're looking at the liquidity zones in an opposite way. So the way that I've been explaining today is when price reaches liquidity, it breaks through it and it continues to push, right? So let me see. I'll just go back to what I was looking at earlier today. So this is the sell that I took this morning, right? And I just want to show that like there's different ways to apply it. The way that CD is looking at it is he's looking for a possible bounce off these liquidity. I'm looking for the opposite. I'm looking for price to break through it. So, and they both work in the same way, that they're not necessarily meant just for one use. You can use them for a balance, or you can use them for price breaking through them. So what CD was looking for was for price to come and bounce off the liquidity. So like if price was to come down, and I know this is the 1 minute, but CD was talking about on the higher time frame. He's basically using those higher time frames to not take trades in that direction, because like if price comes down and touches, let's go back over here. Like using this as an example right here. There's a sell entry here. CD, if this was like the 4 hour. Yeah, I know exactly. So CT mentioned liquidity zones are not the same as supply and demand zones. So I think that's kind of what you're using them as. CD. You're looking at the liquidity zones as supply and demand, because what CD is kind of looking at is if prices to bounce off these areas here. And that would make sense for supply and demand, just like what CT is mentioning. For us, we're using liquidity zones as areas of liquidity. So price breaks through it and then it just pushes lower, right? So that's kind of what I was looking for here. Price breaks below it and then it just keeps pushing further and further, liquidity. So I think that's kind of where the analysis kind of clashes. CT, you kind of, or not CT, CD. So it's like CT and CD. So CD, do you kind of get what we're saying here? Because if you want to, I think what you're looking for are supply and demand zones, because you're looking for price to bounce off them. But for liquidity zones, the ones that we use here on the short time frame, we're looking for price to actually break through them and push further. So I don't know. Does that make sense? Do you see? I want to make sure that there's no confusion here. Okay, cool. Yeah, so he understands. So yeah, your analysis for that CD works. It does work on the higher time frames in some instances, but I'm using them differently. So for me personally, I wouldn't use them that way, but you could use them that way. If you find them to work, then great. Whatever makes profit, right? And then maybe we can start using that as well. But for me, I'm using them as like momentum to continue. So like for example, right here, we have a sell momentum. I want the sell momentum to push right through all these liquidity zones. So just different analysis, but yeah, basically I do get what you're looking for there. I don't necessarily trade supply and demand, so I can't really help you with that specifically, because I use them for different reasons. Yeah, exactly. Just what CT said. CT said liquidity zones can be sell stops, closing longs, resting orders. Exactly. No, definitely CT. And that's what I use them for. So, but no, that was a good question though, CD, because I'm sure a lot of people were using that for the same reason. I know a couple people messaged me privately with that same question. But yeah, the analysis is just, slightly different. So let's see. All right, so I think that's it for these questions here. Now let's finally get over to the 5 minute. And a lot of you guys are waiting for that. It's the main thing you guys are here for. So looking over here at the 5 minute, I already have the requirements set up right here. Let's go to the most recent entry, which would be right over here. All right, so this is the one that we looked over on the live today. Basically, CD, I'll come back to or here, let me just answer your question now before we move forward. So CD said, so why is the wick rejection off the zone used for the 10 minute if it's, so you're looking at two different things, CD. You're confused with the K2SR and you're confused with the high-low. High-lows and the SRs aren't the same thing. For the snipes, we're looking at the SR zones, right? We're not looking at high-lows. So you're confusing the two. You're looking at the, yeah. So CD said, oh, I mean the SR zones the whole time. Yeah, so that's where you were confused because you were referring to two different things. SRs and high lows are completely different. No, they weren't. That's why they're two different indicators. CD said I thought SR zones were liquidity zones. No, they're SRs at SRs, which is support resistance. High lows are high lows, which are totally different. You can see here that they don't even line up. So, okay, now I understand why you're confused, because you're looking at two completely different things. Like you can see that we have a high here, but the SRs are different. So, yeah, maybe I think that's kind of where, if you want to use the SRs, yeah, this is where you'll see the bounces from. We use the SRs to catch the bounces. The high lows we're using as liquidity for price to push through it. Yeah, CD said I was meaning SR zones the whole time. Oh, that's why I was talking about rejections. Yeah, so those are completely different. For SRs, we're looking for rejections because they're used as support and resistance, right? Kind of similar to supply and demand. They're not exactly the same, but support and resistance are where price bounces from. High lows are liquidity. We're looking for price to break and continue lower. So yeah, totally different analysis there, but now you understand the difference between the two, CD. So yeah, no, if you want to use that, so going back to your question, if you want to use the SRs on the higher time frames, then yeah, no, definitely you can use that. Before, when we used to trade on the 4 hour, that's what we would use. We would use the SRs for the 4 hour, or we use it from the daily and anything higher, because the SR strategy is based off the 4 hour time frame, right? So basically you draw the zones on the 4 hour, the daily, and the weekly. So yeah, if you're talking about the SRs, then yeah, you should use the higher time frame CD, but not for the high lows. So hopefully that cleared up a lot of confusion for you. But yeah, it does make sense if you're using it for that. Yeah, no problem. I mean, it's all right. We were all confused there for a second. I wasn't sure what you were talking about the whole time until we cleared it up. But yeah, okay, good. So, all right, back to what I was saying. Let's go back to the 5 minute here. And I'll show you guys the strategy that we kind of uncovered today during the live. So basically for this strategy here, and guys, this isn't the official strategy, right? We literally thought about this a couple hours ago. I started testing it and it's been working crazy good. So first requirement, you want to identify the K2 high low using the K2 high low indicator. Looking at this right here, we identified this as a high. So I'll just draw a line right there. There's a high. Second requirement, for buys, you want to look for a low with a red candle. For sells, you want to look for a high with the green candle. We have the high right there. It's a green candle, right? Requirement 2 has been met. Requirement 3, you want to make sure that the following candle is opposite. So we have a green candle here for the high. The opposite candle right here is red. There needs to be a pending momentum in that direction. So for example, here we have a buy signal. The next signal is going to be a sell. So that's going to be the following momentum, right? So that's going to be considered pending momentum. Pending momentum is going to be for a sell because we currently have a buy. Next, you want to make sure that the max stop loss is going to be 75 points. So we'll put a short position right here. We generally want to place the stop loss at the high, which is right here. In this situation, obviously, we wouldn't have taken it because it exceeds the 75 points. It does work still sometimes, but I just wouldn't risk it because it's just too big of a move. Obviously, you can see right there, it still hits, but it's not one that we would take. And I'm showing you that as an example. Again, right here, here's another example for the opposite. This is one that we would not take for the same exact reason. We identified the high low. Right here's a low. It's with a low red candle for a buy. So we're looking for a buy here. Next candle is opposite, which is green. You enter a long position right here, but first you're going to check to see how far is it. This is off by like 111 points, way too far. That's about 1,111 pips. So we would skip that. Let me find one that's actually solid. Okay, so I think this one right here might be good. Actually, it wouldn't count because we already have a buy signal here. Skip this. Skip this. Skip that. think there was one that came up. Let's see. That's how you count. This candle's too big. It's more than 75 points. Okay, so here's an example right here. Matt said, so ideally have it engulfing. It doesn't have to be engulfing. It could be any candle. It could be as small or as big as you need it to be, but it doesn't need to be engulfing. Yeah, if it was engulfing, we'd have that as a requirement, but it's not. It could be any size. I'll show you more examples here because I know there's a couple examples where it's not that big, but I mean, it doesn't have to be engulfing. So if you want to use it as engulfing to have a higher confluence, yeah, great, you can use that. But from my testing, it's any candle. It doesn't have to be engulfing. It could be smaller. Like here's an example right here. Perfect example for you right here, Matt. So you're referring to this as engulfing. You can see right here that this is not engulfing at all, right? So right here, identify the high low. We have a low right here. For a buy, we're going to look for a low with a red candle. Here's a low with the red candle. Following candle is opposite. It's green. Fourth, you want a pending momentum in that direction. Since we're looking for a buy, we need a pending buy. Here's a sell. Next candle is going to be, or next momentum signal is going to be a buy. Max stop loss is going to be 75 points. So right here, you can see the low right there is about 56. I leave it at like 55 just to be close. And here's just an example. I'm just using this as an example where it doesn't need to be engulfing. So right here, we have a perfect entry. We let it run. And there you go, full TP. So you guys can see how simple it is. And it doesn't really go into drawdown very much. Super, super simple. So there goes an example of this here. I'll see if I could find another example. All the examples that I saw today were all full TP. So I think that's a really good sign. So let's see if there's another one over here. So here goes another one right here. Again, identify the high. Just want to make sure that that high is a green candle. It's a green candle right there. Following candle is opposite. You enter a short position right here. Stop loss is going to be somewhere around that area, 46. Sometimes I like to round it up a little bit to maybe like 50, but I mean, it just depends. Sometimes you want to put it a little bit higher. So let's do like 48. Because I don't want to overextend it, but I also want to have a little bit of space there. So we have that right there. Everything's all set up. You let it run. Full TP right there. So CT said no. So you can use any high, CT. It can be any high or any low. It doesn't have to be a higher high or a lower low. It can be a, a higher high, or it can be a lower high. And this doesn't really matter too much. It just has to be a high or a low. Basically, whatever is most recent. Other than that, let me see if there's any other examples here. Just want to try to show you guys as many examples as possible to show you guys how this works. Here's another one here. So here's a small candle actually. This was actually during Asia session. So during Asia session right here, we have the same situation, right? We have a low right there. We have a low, it's a red candle. Following candle is opposite. You have a pending buy. You enter this with a long position right there. Obviously, the TP is going to be a lot smaller because it is Asia session, very slow. It's right there about 35 pips. If you guys want to round it down, I'm going to round it up. You guys can too. It's going to be up to preference, right? Just whatever you guys feel comfortable with. I want to keep it as close to the low as possible. So again, right here, entry point, let it run. And there you go, full TP. So it's as easy as that. Kevin's asking if it works on the 3-minute. I haven't tried it, but Maddie said it does work on the 3-minute, and Patricia does as well. So, I mean, I literally just came up with this today, guys, so I have no idea. I literally just thought of this strategy like 2 hours ago, 3 hours ago. So I haven't had time to test it, but trying it on the 5, it does work pretty nice. If you guys want to try it on the other time frames, feel free. But from what I see, it works on all time frames. You know, this is probably going to be like, it seems like every week we have a better variation version. I mean, they all work, but it seems like each week we have like variation 1, variation 2, variation 3, and it just keeps getting better. Yeah, I know exactly. Maddie said the variations just keep getting better because we just find different patterns. Um, this indicator that I created, or that my brother created. Oh, my brother's here. It's Justin here. No, my brother's not here, but my brother created this indicator for me, and I didn't realize how useful it was going to be for us. I mean, this is like super game changer, guys. Like this, once we came out with this indicator, like a lot of people kept like talking shit, saying like, "Oh, he's just using a high." Like everyone acted like this was such a simple indicator, but why hasn't anyone thought of it? It always blows my mind when people come and hate on K2. But I'm like, okay, if you knew this indicator was available, why didn't you create it yourself? Or why didn't you already have this? Um, but now that we do have it, it makes a huge difference. Like again, right here, another example, we have a low right here. Next candle is a buy or a green candle. You let it run. And I've been like testing this and it's crazy. Like literally every trade hits and it's like, I don't know. It just gets me super excited because I'm like, man, I'm gonna make so much profit off this. You let that run and there you go, full TP. And here's the crazy thing, guys. Since this is 1-to-1, you can risk about 3% per trade, right? Because you're doing a 1-to-1. You do 3% and you think about it, right? If you're doing 3% profit risk per trade, and this strategy hits almost every time, FTMO requires 10% profit, right? So how many trades do you need to reach that point, right? 10 divided by 3%, you need about 3.3 trades. So you take 3 of these trades right here of these 5-minute or these version 3 variations at a 1-to-1 for a 3% risk, which is probably going to hit. You can pass FTMO with like 3 trades or 4 trades. So I think this is like pretty exciting for a lot of people here who have had issues, passing FTMO, because this stuff hits like almost every time. I was like purposely looking for bad trades. I went to like random times. Like I'll go over here to like, I don't know, let's go to like, how far can we go? To like November or whatever, right? We'll go to November 10, random date out of nowhere. Let me go over here and put the requirements up again. So same thing again right here. Sorry, I just put forward again. So right here we have a low, right? We have a low right here. You enter a long position right there. TP. And one thing that you want to keep in mind is you don't want to have your stop loss too close. So I think we might have a minimum and then maybe a maximum in some instances. So like 25, 25, something like that. I don't know. We'll have to play around with it. But yeah, if you're to let this run, full TP right there. And this is a random date. I didn't think of any dates to look at too. I just went straight to November 10th. And you can see that it still works perfectly fine. It's like nothing. Like I didn't specifically pick a date to look at trades. I just went to a random date here. Again, right here, I mean, there's another one. I mean, there's a lot here. This is a very simple strategy to apply. You just need the K2 indicators to identify what's solid and what isn't. So again, right here, another long position right there. This is like Asia session though. So it's kind of, I don't know if I would apply this during Asia. Maybe I'd probably skip Asia because volatility is really low, spreads too wide. So maybe again right here for, I don't know, 17 pips. Full TP again right there. Yeah, Delma said the K2 indicator, K2 HL indicator makes it all possible, but also the momentum. You need the momentum to make sure you're trading in the proper direction. Kevin said, have you back tested why the second candle is long? So that's why we have this requirement right here, Kevin. I'm not sure if you missed the requirement. Max stop loss is going to be 75 pips. So if it's too long, it's going to be more than 75 pips. So you're not going to be taking anything that's more than you know, it's going to be considered too big if it's over 75. So and I haven't really tested it, but from what I've seen, if the candle's big like that, not just from this analysis, but from all trades, right? Normally, if we see an entry and the candle is too big, it usually has to retrace a bit. So that's why we don't look for trades, or we don't enter trades when they have a big candle like that. So just keep that in mind, 75 pip or a 75 point stop loss. Other than that, here, let me scroll up real quick. Just want to make sure I don't miss anything. Maddie sent me a couple of things here. Let me check real quick. Let's see. Maddie said, might be able to use the SR zones to help us match the V3 with bounces off zones and pivots. Yeah. So Maddie's using another requirement, or not another requirement, but another confluence. So one thing that you guys could use too also for entries. So looking at this right here, where was the last entry that we took? This one right here, right? So if we were looking at this here, you guys could turn on your K2SR and see if there's an SR right there, which there is. So that's actually a good idea too, Maddie. I mean, you don't have to use this. Like I mentioned before, guys, we don't want to have too many requirements because it's going to have us avoid a lot of good trades that could possibly be taken without it. So yeah, just like Maddie said, you know, if price is bouncing off the zone right here, this gives you even more confidence that price is going to keep pushing up from there. So same trade that we were looking at earlier. Maddie just pretty much added an extra confluence to it. Or I mean, I guess we could probably round it up about 20. So looking at this right here, if you took that, same thing. So yeah, Maddie, that's a good confluence to add to it. It's not 100% necessary, but it does help. Bianca's asking, as always, we trade the direction of bias for this V3. I don't think we necessarily need to trade in the direction of bias, Bianca. I know normally we do for pretty much every trade, but for this one here, it's such a quick move within a specific range, right? And the range that I'm talking about is the high and the low. This is basically the range that we're trying to shoot for, just within this area. So I don't think it's really necessary. I mean, in the future, yeah, maybe we might be using that specifically. But I think right now during the testing phase, we want to have a wide test, right? We want to have a test with as little requirements as possible. And then when we find losses, that's why I'm purposely looking for a loss here, but I can't find any losses. I'm like literally trying to find a loss here. So the way that I figured out this requirement here, the 75 point requirement, was because a lot of losses happened when it was too big of a move. So right now I just have a broad overview of the strategy. I want to have as little requirements as possible. I'm going to just use this for now. I'm not going to use anything extra because you don't have to use more than you need to. If we start to have losses, and that's where we start to retest it, and we try to figure out why did those losses happen. If the loss happened because it bounced off an SR, then you know maybe Maddie's requirement with the SR would be required. But right now it's not required because I can't even find losses applying this on its own. So like I'm like literally looking for a loss here. Like I want to see a bad trade so that I can figure out what can I change, but there's nothing bad about it. Every trade I see here, it wins. So like right here, we have a high. It's a red candle. It's kind of tight. So maybe we'll just go for at least like 10 pips or whatever, or 100 pips. You let that run, full TP, right? Another one right here. I'm literally looking for a loss. I can't find losses. Like doesn't matter how hard I look, I can't find any losses here. Again, right here. And this is a random date. It's like November 9th. Again, right here, a buy. Stop loss is around like 42 pips or 420 pips. You let that run. Another full TP. Like I'm purposely looking for losses, guys. I can't find any losses here. Again, right here. Same thing. We have a high, sell, entry, TP right there, about 300 pips. Full TP. Man, this is crazy. I can't wait to use this tomorrow. I can use it tonight. Again, right here, same situation. Like I'm purposely looking for a loss here, but I can't find any. These are like 4 back-to-back wins. If you took all these trades here, you would have passed your F team already. 40-40. That run. So this would have been a loss. So what could have been done differently here? So one thing that might be a bit difficult when backtesting is we can't check if there was news on this day, or actually we could. Okay, so November 9th. Let's see, let me go back to that date, November 9th. Okay, so there was news that morning. Yeah, there was actually high impact news. So Powell was speaking. So we wouldn't have taken the trade that day anyways. So that just wouldn't be a trade that we would have taken because at that specific time, Powell was speaking. So, I mean, yeah, technically we could backtest it and we could kind of figure out if there was news that day or I don't know. But for the most part, I mean, they all hit. Let me just find another random date. I'm gonna go as far back where, okay, so we're here like on October 26th or 25th. All right, here is another one right here. Here we go with the high right there. Sell, stop loss right there on 15. That run, full TP right there. And I want to take these trades already. Is there anything to take right now? Let me check. All right, so let me scroll down a little bit real quick. All right, let me scroll up. Let me see if I'm missing anything here. Scroll up. So Solarm said I may be wrong, but I noticed he hit stop loss when momentum is invalid. So I'm not sure if you incorporated the requirement, Solarm. If you have an example where that happened, let me know so I can pull it up. I haven't ran into anything where something like that happened, but either way, you wouldn't be looking for an invalid one anyways, because you're going to be looking for a pending one. So like, for example, if you have a buy here, you're looking for a sell signal to happen after. So I'm not sure if you incorporated the, if you incorporated it. Yeah, CT said to use a demand confluence. I would use it if I knew how to identify supply and demand very well. I mean, oh, so you choose, or yeah, I mean, we can use the order block indicator. Yeah, the order block indicator. So yeah, actually that's good too. I mean, there's a lot of different things that we can use. You can use the order blocks. You can use the SR like Maddie was using. You can use, I mean, there's a lot of different things that you guys can use for an extra confluence. But no, that does work, CT. CT has the order blocks right here. I still don't think it's necessary yet, unless we start to run into, more losses. That's why I'm trying to go back to like random dates. Here, let's see. For this one right here. Yeah, so CT, the one that he drew up right here, it hit for 64 points, which is 640 pips, which is a huge move. That's why I'm going to like random dates, guys, because I want to see like when it doesn't work. But from my experience, from just going back as far as I can, I don't really see many losses. Let's just go to another random date real quick. Okay, October 10th. For whatever reason, let's just look over here. All right, October 10th. Here goes another one right here. We have a high, red candle, pending sell. enter for a short. It's another small move. Looks like 15 pips or so. Full TP. Man, this strategy is crazy, man. Why didn't I ever think of this before? And I want to thank Deswell for like, because we never use the 5 minute. I used to use a 5 minute when I first started trading, and then I stopped using it. But now, like, I can't find a loss. It's like we're purposely looking for a loss here. We have plenty of losses. Yeah, Maddie said I can't find a loss. He's looking for losses right now too. Yeah, man, it's crazy. It's crazy how these all line up. Okay, again, right here, same situation. Man, I'm about to go full lot sizes in all these trades. Go full lot, and I'm gonna let these trades run. Again, right there, high, green candle, opposite, entry right there. Stop loss at like 30 pips, I guess. There you go, full TP again right there. So let me go check. 1305. I'm trying to see. Oh, so one thing that you guys also want to keep in mind is that you guys don't want to trade around the swap time. I mean, that's like, we normally wouldn't take a trade there anyways because we don't want to hold over the swap. But yeah, it looks like you guys saw one at 1305 right here. Yeah. So let me mark it up for you guys real quick. I mean, even if I saw this here, I wouldn't have taken it because that swap market closes at we got 13 whatever right here. So this is one that I would have skipped to begin with, but yeah, would have been a loss because it's around the swap time. Usually I don't trade after 12. So from here, I don't even take any more trades because it's too close to the swap. The problem with trading on the swap is that a lot of people try to sell off before the market closes. And that's kind of what happened here, right? Between 12 and market close, because the market closed right over here at 1355. So as you can see, this tends to happen often once you get close to market close because people try to sell off before the new day. So I wouldn't have taken any trades right here. Maybe that's another requirement that we need to put in there. But in general, I don't take trades around this time either way, not just for this strategy, but for any strategy. Because it's usually a bad time to trade. You get a lot of manipulation around there as people try to sell off. So it's always like, yeah, it's always keeping an eye on the swap. Just like what 13 said here, keep an eye on the swap, Rick, always. That's why usually I send out, I don't think I send it out anymore, but I used to send out an alert every day to close all trades before the swap. Let me see I think I used to send that out every day at like noon. So yeah, right here. Usually I used to send this message out every day where it says, we recommend temporarily canceling pending orders or closing your trade before the swap. I don't post it anymore because I figured everybody already knows not to trade after 12. Yeah, I mean, for the most part, I don't recommend trading around that time. So if you guys ever look for trades, not just for the strategy, but any strategy in general, I wouldn't take anything after noon. Let's see. So let me just scroll up real quick, and I want to see if there's anything that I'm missing. Rick said the 850 was like 4 different strategies combined or something. I just want to see Sean review it. Okay, so let's go over there to 850. I think there was news at 8 today, or I don't know. We'll see. Let me just go over there to see. So 850 right here. What were you looking for here, Rick? So basically 850. So this technically, let me see how big is this. I mean, this was too huge of a candle to begin with. So I wouldn't have taken this either way because it's a 1,500 pip move. It's a huge candle. Like for a 1 5-minute candle, that's way too big. Gotcha. Okay. So yeah, CD mentioned that there was a 10-minute snipe and 5-minute variation. Okay, that makes sense. Oh, gotcha. Okay. Yeah. So it looks like there was a snipe around that time too. Let me go to the 10-minute over here. You guys said 850, right? 850. If that candle was too big, then I wouldn't have taken it. But, let's take a look anyways. All right. Let's replay back to 850 over here today. There we go. Okay, 850. So you guys mentioned that there was a snipe, which looks like there was, yeah. Snipe right there. Yeah, this is too big. This is a huge move. Like, because you're going for like 50 pips or 500 pips, 50 points. You guys can see that the stop loss is going to be in between this entire candle right here. So if it retraces just a little bit, it's going to stop you out. And then it probably does come right back down. Let's see where it went from here. Yeah, look at that huge candle right there. So when you guys see a big candle like that, you definitely do not want to take the trade, because just like I mentioned right here, you can come up, hit your stop loss before coming back down. And it looks like that's basically what happened here. Or not exactly, it just reversed from that point. One thing that you guys want to keep in mind too is that as it gets close to like 10, this is, mid-market reversal time, 10 to 12. So as you can see, price was coming down. I usually mark up 10 to 12 right here, because that's when the mid-market reversal tends to happen. And that's exactly what happened here. Price was dropping, mid-market reversal happened at 10, reversed all the way to the upside. And then it came back down. So exactly. So Rick said, so we basically only take trades if the candles aren't huge, so we don't get wicked out. Exactly, Rick, because that's what happens a lot of times, right? You guys notice that you guys will enter a trade where it's too where the candle's too big, and then it'll reverse up, stop you out, and then come right back down. And I'm sure that you guys have noticed that happen probably to you personally a lot of times, because it's happened to me too, and it pisses me off when something like that happens. Bianca said that there is a 5-minute coming soon. Yeah, right here. Possible 5-minute right here. I don't know if anyone is planning on taking it. Maybe I'll take it with a small lot size just to test it out. The main problem with this here is the fact that it's at it's like right on open. So it does make it a little risky to take the trade here. We got 2 minutes left on it, so I mean we'll have to wait and see. Oh gosh, okay, Melzon. Yeah, I was like, I haven't seen that name before, Melzon, so I see that it's your wife. Yeah, no problem, it's cool. I just wasn't sure who Bianca was. I haven't like seen a Bianca in here. Well, we do have a Bianca in here, but she doesn't come on the live, or she is in the live, but she doesn't talk in the group very much. All right, so we'll see if this closes in the next minute or so. If it closes, then we'll follow it. Maybe I'll take it with a smaller lot size or so. But this will just be, a tester. Nice. CT said NASDAQ runs well on the 5 as well. So, I mean, that's good. It seems like this strategy works on like everything. It works like on majority of the time frames. It also works on majority of the pairs as well. So I'm gonna wait for this to close. And then we'll see. It doesn't look like it's gonna close, though. It might close green, which is fine. If it closes green, let it push up higher, establish a higher high or high, and then maybe the next candle. Yeah, it looks like it's gonna break it, so it's okay. I'm gonna step away for 1 second, guys. I'll be right back. All right, guys, I'm back. This might be the entry right here. See if it closes over here. Yeah, Patricia said not going to close because it didn't close on the 3 minutes. So maybe this one right here will close. We'll see. And maybe this will be our tester. We'll see how it runs. Obviously we want to take these trades with no bias just to see how it runs on its own. If we need a bias, if we need to start implementing a bias, then obviously we will. But if it's not necessary, then there's no point. So let me scroll up. I just want to make sure I didn't miss any questions. Let's see, Isaac had a question. Let me get to that real quick. Isaac, let me scroll up real quick. Yeah, Joshua said this V3 strategy is mind blowing. I mean, it's blowing my mind too. Oh, there's another Rick here. I just realized. I thought that was you this whole time, Rick. Rick R and the other Rick. My bad. I thought you guys were the same Rick for a while. Let me scroll up. Isaac had a question over here. Miles said, think it'll work on the NASDAQ and DAX. I haven't tried it, so maybe we can go and test it. It seems like it does though, because CT said it doesn't work on the NASDAQ. Let's see. Sorry, I'm trying to find your question, Isaac. Or let me scroll up real quick. Rick said, Sean, for risk to reward, when you figure out what your stop loss is, say yes. So I mean, it depends on your account size. It depends if you're on 100K or a 200K, but you would want to risk about probably less than 3%. Maybe 3% might be a little much. I mean, it just depends on you guys, right? On how you guys want to do it. So for example, if you're using, I use a 200K. So 200K, so 2% of 200K is 4,000, right? Obviously. 3% of 200K is 6,000. So for example, if I'm using a 7 lot and my stop loss is 500 pips, then that's gonna be my risk. It's gonna be under 2%. So if I'm using a 7 lot, but your stop lot, your lot size is gonna vary depending on your stop loss. So everything is going to be based off your stop loss. So what I would recommend is you guys have a set, like already understand what your stop loss is going to be. I would probably separate it between whole numbers, maybe 400 pips, 500 pips, 600 pips, 700 pips, just so that you guys have an idea. I think I might just run 7 lots on all my trades for a while, just to, get a feel for it. Because if I do, I can't do a 10, that's going to be way too much for like 500 stop loss. Sorry, 5,000. So if I do that, it's still going to be, the risk is going to be a little high. So maybe you're risking a little over 2%. So I don't think I'm going to be risking 3% right out the gate, but it's just I'm just going to have to try it out and see how much I'm looking to risk on this, obviously. So let's see. We'll see if this closes right here. If anyone wants to take it, I'll probably take it with you guys. We'll see how it runs. We just got to see where it closes. Let's see. So we got about 30 seconds. Yeah, I'll scroll up real quick, Isaac. Give me 1 second. After this candle here closes, I have to adjust my TP stop loss a little bit. Yeah, it's not CT, but I'll just play around with it. I'll see where it goes. All right, so we'll see where it goes from here. I think I might have to adjust. I don't know. The thing is, I don't want to have my TP stop loss too close because, you know, obviously the type of market that we're running right now. Currently in profit 1,000. Let's see. I might just have to manually exit when it gets to the point because I can't. I have it set at 400, but I should probably. I think I'm gonna move my stop loss in profit. Give it a few seconds. I don't want to move it too early. And this thing's hard to see. I'm trying to figure out where should I move my TP. Right about. I think I moved my TP up okay. And this is like, it's kind of harder because you don't have a set TP stop loss. I'm already out. So I hit my TP, made about 1,700 off that trade. So I'm already out, guys. I hit my TP. I don't know if I moved it too close or not, but I made 1,722 off that trade. Take a 7 lot. So there you go. live test of the strategy, and it worked. Oh man, that was a nice trade. Had no stress, just chilling out on it. Man, that's dope. That is nice. Kevin's asking, do you adjust your stop loss after? No, I don't. I just had to adjust my TP and on my stop loss because my TP was too far out. I set it to 400 pips on my DOM, but I just pushed it down a little bit. But there you go, full TP. Man, easy as that. I'm pretty excited. I want to go full lot next. You know, over a full 10 lot. That was that's pretty simple and straightforward. I said 15 lots. Oh man, I'm gonna open FTMO and I'm just gonna go straight full lots. Actually, I can't open FTMO. Maybe I gotta find a different broker but yeah. So as you guys see there, it worked perfectly fine. I know Maddie said Lambo coming soon, right? Okay, so let me go up real quick, Isaac. Sorry, I've been like missing your question this whole time. 241. Okay, Isaac said, Sean, I lost 2 trades because my stop loss was set to 3,000. Assuming I am confident with direction, do you suggest increasing stop loss to 4,000 on a 10 lot trade? I would have had all wins today if stop loss was. So today, Isaac, the problem with the market was that volatility was too high. So in a situation like today, yes, if you're confident, even myself personally, sometimes I use a 500 pip stop loss. Even though I should be using a 300, I use a 500 pip sometimes. So, you know, to your question there, Isaac, and I know it's frustrating. Like you said, you would have had all wins today if your stop loss was a bit wider. The problem with today's market is that it was moving too fast. Like, you know, you look at every candle here, each candle is moving like 300, 400, 500 pips. So it was really hard for you to have a 300 pip stop loss. Because you think about it, right? Your stop loss is 300 pips. It's just way too tight when the market's moving this quickly. So yes, short answer to your question is yes, I would extend the stop loss sometimes if you feel really confident about a position. I generally move it to 500 because I want that safety net. Because just like you said, if you feel confident, you're like almost guaranteed it's going to hit. I would give it that extra safety net, right? Just in case. So yes, if you feel very confident about a position, then, you know, feel free to move your stop loss a bit wider. I know it's not the best idea, but, you know, sometimes you just have to do it because the market's just moving too fast. So like you think about this, right? Each candle moves about 500 pips. If your stop loss is 300 pips, you're going to get stopped out before it hits your TP. So yeah, I mean, if you feel confident, then yeah, go ahead and move your stop loss wider. I do the same thing. So I'm not going to tell you what I don't do, you know, right? I'm going to tell you exactly what I do. And I do the same thing that you just mentioned. Because I started to realize that too sometimes. If volatility is too high, you have to give yourself some more cushion to survive the spikes back and forth. And if you have a loss, it's completely fine, right? At least you understood that you had that loss because you moved your stop loss wider. And it is what it is. You know, you play the game, you roll with the blows, and you just bounce back. So yeah, you can easily do that as well. So let me scroll down. If you guys put any questions here that I missed, feel free to put your questions again, because there's so many questions here, guys, that I think I might have missed a couple. So if I missed anything that you guys asked, yeah, if I missed any of your questions, go ahead and put your question in the chat again, and then I will go and answer it. So I'm gonna scroll down to the bottom and see what else I missed. Yeah, I know, Isaac, you killed it. So Isaac said, okay, thank you, captured 46K. So like, yeah, looking over at Isaac's profits. I mean, Isaac has been doing numbers. Like, it's crazy how much you've been killing. So some of you guys took that sell with me earlier. Narith over here took it, locked in 1,360. Nice work, Narith. And Melzon over here too. So Melzon actually took it as well on his personal account, locked in some nice profit. So great work, guys, for whoever took that what is this? Let's say, hi guys, can I know what position I need to follow right now on US 30? And Ali said buy. Oh my gosh, Ali, man, this guy. Ollie's like a kid that's in our, well, he's not a kid anymore. He's like a teenager. He's been in K2 for like a long time. I'm gonna send this to Aaron. Why would Ollie tell him to take a buy? That's horrible advice to tell somebody. All right, it's back to what I was saying earlier, guys. Okay, so we have a possible entry that's coming up again over here. Let me see if there's anything else that I'm missing. Nick is asking, what did you set your TP stop loss for that 5 minute? I initially set it at 400, but I adjusted it because it was too wide. So where was the entry again? Let me go back to that entry. It was this one right here. So initially I had it set at 400 because price was actually down here, but it wasn't anymore. So it was at 400, but I moved it down to about, I think it was like 300. I can't remember. It was one of those. It was like 30, I think. And that's where it hit. Yeah. So it actually was at 30. So the way that the strategy works, guys, is you guys have to place your stop loss at the previous high or low. So like, for example, right here, the entry would have been right there. Your stop loss TP would have been right there. It would technically would have been at 220, but I just kind of gapped it up a little bit. So there's some space there, and that's where I took it from that point. So yeah, looks solid right there. Other than that, let me see if there's anything else for us to. It's like there might be another. No, actually, no, it's not green. No entry. Let me scroll up real quick and see what else I missed. Brian said for the DOM, I mean, your DOM would depend on the stop loss isn't always going to be the same, guys. There's no fixed TP stop loss. The TP stop loss it varies because you place it at the previous high. So say, for example, like for this one over here, right? It's not going to be 400 for this one. See you guys enter a short position right here. It's not always going to be a set TP, guys. It's going to be different. So for example, right here, I mean, you wouldn't take this trade because it's too wide. I mean, it's too far out. So you wouldn't have taken it. It's like 900 pips. But looking over at, let's see if I can find another one. I don't know why I was just confused with that right now. Oh, okay. So yeah, going over here. So let me just show you guys another example again over here. This would be a short position. your stop loss would be different. It'd be 470, or you can round it up to 50, 500. So your stop loss, your DOM is not always going to be the same. It depends on what your stop loss is when you measure it. So that's why you have time in between the trade. Like, you're waiting for the countdown to drop. You're looking for that to confirm, and there you go. Your DOM would have been 5,000 for this one. So I mean, it just varies by the trade. It's not always going to be the same. It's going to be slightly different. But the max is going to be 750. So just keep that in mind. I know, CD, right? Let's see, Rick said, I think for this, it would probably be easier to just set a 5K TP stop loss and then manually moving it. Yeah, no, that's actually a smart idea, Rick. That's actually what I did. I set it to 400 because I thought it was going to close at 400, but then it moved, so I had to adjust it. So that's basically what I did. I mean, if you guys want to do that, it's up to you. It just really depends on the person, right? If you're able to move quick enough to adjust it. But yeah, if you guys are able to watch it, it would make sense for you to make those adjustments. Exactly. Yeah. So Nick said, just got to pay attention and set a stop loss accordingly. Yeah, because your stop loss is going to change depending on the entry. Like for example, here, if we have an entry here with the sell, now your stop loss would be 400 pips, right? Now it'd be 4,000. It just depends. It's going to vary from trade to trade. It's not always going to be the same. But that's a great idea, Rick, that you just mentioned. That does help. Let's see. Alice said, I'm sorry if I missed this, but the problem I have is the verification of the high low on the 5 minute. You don't need to verify it because it's not a requirement, Al. You're just looking for a high low. You can't verify it until 5 candles pass after it. So you're not going to be able to verify it until it actually closes. But the thing with this strategy is that it's not going to repaint unless it happens on that following candle. But that following candle is going to be, like, for example, right here, I know that this repainted, but at the time of, it's not going to repaint when your entry comes up because your candle has to be below this high. So when the entry does come, it's not going to repaint. But for the specific strategy, it doesn't require that you confirm it. The only strategy that requires that you confirm it is going to be the high-low scalp. None of the variations require that you confirm it because it's going to repaint until it actually establishes. So it's not really necessary whether it creates a new high-low or not. Hopefully that makes sense. Other than that, let's see. Miles said, so is it safe to say that the 5 minute high-low strat can be used in place of other versions? Seems easier, more solid, but I could be wrong. From my perspective, Miles, I think this is going to be the main one that I use. So now in the live session, this is probably going to be the main one that I use. The problem with the shorter time frames is that volatility is too high right now. So it's going to be hard to catch 1 minute trades when the volatility is spiking around so much. Because the thing is, like for today, we took a variation here and I lost it because my stop loss was too tight. It came up, hit my stop loss, and then it came right back down. So I think for time being, while volatility is still high, I'm probably going to be using the 5 minute because it gives us more space to take some trades. I don't know if I want to take this right now, Maddie. Are you looking to take this version 3? I kind of want to take it, but I also don't because the volatility is so low. I think my spread kind of sucks right now too, so not really looking to risk it. So what I'll do with this trade right here, guys, is I'm probably not going to take it, but I'll follow it just to see where it goes. Because the thing is, I don't want to take any trades in Asia when it's not really moving, right? Because I don't want to be caught in this forever and then it doesn't do anything. Let's see. Yeah, Maddie said this morning the 5 minute chart was moving how the 1 minute used to move. Market's moving way faster than usual. No, I agree 100%. So there's no entry off this. That following candle is not a red candle. Talanji said it's going to take a lot of discipline watching these 5-minute trades, going back and forth for 10, 20 minutes on the 1-minute chart. I guess it's a matter of building confidence. Yeah, no, exactly, Talanji, 100%. It's just going to be a matter of patience, and because I know a lot of people are impatient. That's why a lot of people like the 1-minute chart. The 5 minutes going to take a lot more patience because you guys are literally going to have to wait. But so let me just go back to today. So today, let's just go back and review the trades that came up during the live. So I'll go to 8 o'clock because that's when we normally stop trading. Let's see. There's one right here that we probably wouldn't have taken. Looks too big. Too big right there. This right here, also too big. This one right here. I keep forgetting. I think there was news this morning. So, or actually, yeah, you're right. There's going to be some days where there's not even any entries. So you got to be really patient for these entries here. This one right here, also too big. The volatility is just too high. Even on the 5-minute, we wouldn't be able to take any trades because volatility is just too high. But I mean, I think if we were on the 5-minute here, we would be able to see that these candles were freaking huge. Like they're way too big. If I saw this earlier, I wouldn't have taken any of those trades on the 1-minute today, or at least not the losing one. So let's see. Yeah, because these candles here are just too big. I think one requirement as well is we can't have a momentum candle on the falling candle because it still has to fit within the requirements of a pending buy. So that's something to look out for because this right here would have been a loss, but we would have skipped it because obviously it doesn't fit the requirement that I just mentioned. But this one right here looks fine. So that was about I rounded up to 400 pips. Yeah, that would have been a full TP right there. Let's see. Yeah, CD said maybe better to just move stop loss to break even on the 5-minute and let them ride since there'll be so many entries all day. Yeah, I mean, if you want to take it all day, then yeah, that would probably make sense, CD. I'm probably going to take them all day, or for the most part all day if I can, because it seems like they come up pretty much all throughout the day. I mean, we'll have to test it, right? I think as we test it all throughout the day, people can tell us if they run into losses during Asia, because Asia is usually the most hit or miss session, right? So if we run into a lot of losses during Asia, then okay, maybe we'll not trade during Asia anymore. But for now, I think we can keep testing it. Maddie said if the trades really do hit like this, then I might have to have a 5-minute chart on a different screen. Yeah, no, same here, Maddie. I'll probably just have one that's open at all times. Might have to buy another monitor. I actually have one more space here for another monitor, so I could probably get that and just have it running at all times to be following. But I think we should be fine because the 5 minutes close, like you have time in between each 5-minute candle to identify the trade. It's not going to be too difficult. Yeah, CT said he thinks price is at London high and supply zone should be a short confluence soon. Yeah, no, I can see that too. CT. Yeah, if we get a sell off this, possibly. Lisa said I have the 1-minute, 3-minute, 5-minute, 10-minute, 15-minute, 30-minute, 1 hour, and 4 hour open. I mean, I technically do have that on mine too. I have all of these right here. I have a clean chart for 1 minute. I have another 1 minute. I have 3-minute and 4-minute and 5-minute over here. So let's see. Yeah, or CD said, I would rather much have this one-to-one risk reward trade over the 1 minute. Yeah, no, and I agree too, CD. You know, the reason why we went to the 1 minute is because it was working well during that time period. Volatility was low, you know, during the winter. So that's why we adapt to the markets, right? When the market's moving slow, we go to the shorter time frames because that's when we have the entries. Vice versa, when the market's moving fast, we can go back to the higher time frames that we were trading on previously. Because before we were trading on the 3 minute, and now we're back to the 5 minute. So, you know, the thing with us here at K2 is like we're always adapting to the market. Market's not always going to give you what you're looking for. And when the market conditions change, you know, you adapt with the market. And that's why we continue to win at K2 because we're always, you know, improvising. We're never just stagnant with one strategy, with one time frame, with one thing. We're always changing to what works at the time. But everything still works. It's just, you know, you're not going to get as many quality entries using one strategy over the other during certain conditions. And I agree, the drawdown does suck, especially if you're on a hot roll and then you have one loss. It's like, man, throws you off. CT said, not sure if my sessions are set correctly. Yeah, CT, if you if you go back to your indicators and you just take this one off and re-add the new one, it should have it set to the default times, which is it should be our time. Yeah, I don't think SF time is different or NorCal time is different. So you should be fine having it set to that. Other than that, guys, I don't see any other entries here. Let me see if there's any other questions. If you guys have any questions, you know, feel free to drop your questions in the chat right now. Otherwise, I think we'll be wrapping up this mentoring session. I've been on for about 2 hours now, so I kind of want to take a break. Gotta take my dog for a walk. But I'll be looking for some trades. So let me see if there's anything else here. Lisa said the sessions work for me in Australia and everything is backwards here. Yeah, Lisa's on opposite time because she's in Australia. Yeah, no, definitely 13. So hopefully you guys like this strategy. I really like it. I think this is going to be fun for us to be applying all throughout the day because I know a lot of people want an all-day strategy. This looks like this is it. So you know, just keep in mind, guys, this is just the beginning. Like, man, check this out. This swap trade right here would have hit full TP as well. I mean, not that I would have taken it, but this swap trade right here went straight up to full TP. Yeah, that was a nice entry right there. This looks like something Rick would have taken. Yeah, it's funny. Kim said, where's the best place to look for forecasts of tomorrow's news? So Kim, main place we look at would be on Forex Factory. Just go to forexfactory.com, click on calendar. My time is set to Pacific, so you can click this and then choose your time zone. Once you have that, just go to calendar and then it'll have all of the news here. These are like the main economic news. 2 places that I look is this would be the first one for the main economic news. The next place I would look would be CNBC.com. So just go to CNBC.com. They don't tell you exact news events, but it'll usually be here in like the upcoming news or something. Like there's just stuff that comes up here, but Kim said, I know the time frame, but where are forecasting to be positive or negative? So if you click on any of these news calendars here, so check this out, Kim. If you go to like, you're looking at Tuesday, right? You want to see predictions of this. You just click on the folder and it'll tell you right here. It'll say actual less than forecast is good, right? So right here, the previous was 1.4. They're forecasting it to be 1.3. So if it's 1.3, then it's going to be good for the economy. That's where you would, or good for good news or whatever. So that's how you would figure it out. It tells you exactly right here what the usual effect is. So if you just click on the folder there, it'll give you a little explanation as to like what to look for, whether it's positive or negative. Yeah, no problem, Kim. It's going to be a good help to you when you start to look at that and see how things move from that point. Let's see. Milzon's asking, would you take V3 close to session high low? Probably not. like today we got kind of screwed. Like today we took it at the high low, the variation, we probably could have avoided that because it was at the high low. Me being the impulsive person took it. So I think it'd probably be safe to take it away from the high lows. And that's if you want to be conservative or safe, right? It really depends on the person because, if you're going to ask Rick and, jokingly asking Rick to take it, I'm sure Rick would take it. But the thing is, Rick is on point. He'll take risks and he'll still hit. So it just depends on if you want to be risky or if you want to be conservative like me. It really depends on the person. So me personally, I probably wouldn't take it, but I could see a lot of people still taking it. And the thing is, the problem is a lot of people don't even realize that the session's high low around that area. Like this is why Mills unasked it, because we're right in between these session high lows. I probably wouldn't, Maddie, because it's right in between the session high lows right now. I probably won't take it on the 3-minute yet, Maddie. I need to figure out, because the thing is I already got things set up here for the 5-minute. I need to figure out what the TP stop loss would be for, the 3-minute. I mean, it still works fine though. It looks like it's too big. Let me see. We wouldn't take that. We would take, no, I wouldn't take this. Too big too. I don't know, maybe. We'll have to play around with it. Yeah, no, exactly. Less noise and more, yeah. So I would probably stick with the 5-minute for now. I mean, if you guys want to go back and test the 3-minute, feel free. You guys are more than welcome. If you guys hit a lot of trades on here, please let us know so that we know that it actually hits pretty often. Or if you guys run into a lot of losses, this would help as well. Yeah, exactly, Maddie. If you can't find nothing on the 5, which I doubt will happen because we just looked through here and there's a lot of entries here on the 5-minute, I would go over quality over quantity. So I'd rather go for if I can go for 1, 2, 3 trades, then on the 5 that they all hit full TP, I would rather do that versus going on the 3-minute and taking a lot of trades and having a lot of them lose. So, but Patricia said it doesn't work on the 3-minute. So I'd have to go back and just see it for myself because I would have to see it with testing or even forward testing before I actually decide to take it myself. Yeah, exactly. CD said I much prefer the 5-minute volatility, so much less noise that messes with your psych. 100% CD, and I agree with you too with that. Anything else? Let's see. I think that's it for now. Yeah, and Patricia said you can always catch 3-minute first and hop on the 5-minute trade. Exactly. No, and Patricia's completely right. Because usually they line up. The 3-minute and the 5-minute generally line up. So, if you want to get crafty with it and catch both, which I can see Patricia doing, it's definitely open for game. So, all right, guys, I think that's it for now. I've been on this live session for about 2 hours. So if you guys have questions, feel free to email me or message me on Telegram. I'll try to start applying this during the live session tomorrow. We're probably not going to find very many entries. We're probably going to find these more so off the session because it's applicable throughout the entire day. So yeah, go ahead and play around with it, guys. And if you guys have questions, feel free to reach out. Otherwise, I will be calling it a day and we will catch you back here tomorrow for the next live session. But I'm excited, guys. I hope hopefully you guys are as excited as me, Maddie, Patricia, CT, everybody here, because, we were literally looking for losses here on the 5-minute. We couldn't find any. So if that's the case and we keep going in that direction, I mean, we can probably see everyone here in K2 pass FTMO, because if a lot of people have problems with the 1-minute, this 5-minute should be no problem for anybody, because you have a whole 5 minutes to look at the trade, take it, analyze it. You have a lot of time in between each candle to take the trade. So hopefully that helps, guys. But other than that, I will catch you guys on the live session tomorrow. If you guys have questions, feel free to reach out. Otherwise,